And welcome back to KTN News Desk. I'm Michael Karanja. Now, the 57 or so days of January are coming to an end, and perhaps that time has given us enough time just to look at what the investment climate in Kenya looks like, and to help us just get like a crystal ball of what to look forward to in the next 11 months. I'm now joined by Peter Ngeno, who's the GM for UAP Investments. Peter, it's a long year ahead. We've obviously had a more or less wonderful 2014. Yeah. But just looking at 2015 in terms of investment, what are some of the areas that you're most excited about?
Well, thank you, Michael, for having me. So when we start looking at investments, what you do is you first look at the economy and you see where the economy is going to be. And in 2015, we expect the GDP of Kenya to be in the range of 6 to 7%. I think the government came out and said they expect GDP growth to be at 6.9%. So in looking at that GDP, you're looking at the drivers of what's driving that GDP growth. So right now we're looking at, inflation is falling in Kenya. I think in December it was at 6.0, and the government's target is between 2.5 and 7.5. So with the falling inflation, we're also getting a decline in interest rates. And any decline in interest rates and inflation is good for the economy, because that means companies and consumers can borrow more cheaply from the bank, and those funds can be used to spur economic growth.
But just looking at that, because I saw some budget policy statement that came out last week, and the government was saying that they estimate that the economy grew by 5.3% in 2014. But just looking at that and where they expect the economy to be at 6.9, don't you think they're reaching too far, saying that since 2007, economic growth has been rather sluggish compared to the 5 years before 2007?
That's a good point, but the point, as I mentioned, when it comes to interest rates and inflation, those were the interest rate environment and the inflation environment in 2014 was not. It'll be much lower in 2015 than it was in 2014. So those two factors alone will increase economic activity.
Just looking at that, Monetary Policy Committee met like 2 weeks ago.
Yes.
Maintained the CBR at 8.5, decreased the KBRR to about 8.54%. Just looking at that, is it a case of now CBK trying to give more leeway to banks to actually get them to lower interest rates in the same way they envision where interest rate spreads should be?
That is one point. They're trying to encourage banks to lower their interest rates as well. In addition to that, and looking at the central bank moves when it comes to interest rates, we expected the interest rate environment to fall a bit further. However, we came in the other day that KRA missed its revenue target, so the government had to go into the market again to raise money. So that's keeping interest rates high. But once the 2015 comes around and past March, where we have a lot of maturities in government securities, we expect the interest rate to start falling down.
And in terms of sectors, we've already seen when the rebasing came, we saw that real estate and the construction sector was huge in terms of contribution to GDP. Just looking at that, and how the government envisions about 6.9%, what are the key drivers for this?
A lot of it has to do with the infrastructure spending that's going to take place on LAPSSET and the Standard Gauge Railway. Those are massive infrastructure projects. So when you have projects such as those, it involves a lot of segments of the economy. So for example, if you're building the railway, you'll need steel, you'll need cement and all those things. So that trickles down to all the industries. So it has an uplifting effect on all the industries. So a lot of it has to do with the infrastructure spend. A lot of it has to do with lower power, energy cost. 30% of our import bill is based on oil. And if oil prices are going down, that means our current account deficit is not going to be as bad. So all those things are spurring the economy.
Just looking at where you were saying KRA missed its targets, obviously putting a lot of pressure on where government is raising resources.
Yes.
How long do you see this playing out before it corrects itself?
Well, the government recently introduced the capital gains tax, so that'll go some way to plug the hole that KRA currently has. In addition, as I said, in March the government has quite a few maturities, so that's why they're also raising money to pay off those maturities. After that, we expect to see a decline in government spend. In fact, the government came out and said that they intend to borrow in 2015, I think it's 144 billion, which was down from the 190 billion that originally estimated to spend.
Just looking at that, it's interesting now you bring in capital gains tax, because there's been a lot of confusion right from the capital markets, where there's been a lot of confusion as if brokers are going to be collecting this. There are obviously a number of people who are not too sure how to calculate it in terms of how to spread it. Do you think it's time for KRA just to say, hold on, okay, let's suspend this for a while, let's see how best we can we can implement it so that by the time they're saying yes, capital gains tax, because no one is opposed to it, it's just the mechanism of its implementation.
Exactly.
So do you think it should be suspended for a while then as they look at certain sectors where perhaps its implementation has been more of a challenge than others?
And you're perfectly right. I mean, you know, I think they rushed this tax, and in rushing it, they didn't take a holistic view. Yeah. So, for example, like you said, there's differences. People are not exactly sure how to calculate it. Is it weighted average, or is it LIFO, which is last in, first out, or first in, first out? Yeah. So they need to provide clarity on a whole lot of issues. In my opinion, if I was sitting at the KRA offices, what I would have done was I would have basically said, okay, look, as of December 31st, this is the price of your stock, this is the price of your land. We'll use that as a base value, because now there's a lot of confusion, because if it's being done retroactively. Yeah. So sometimes maybe people have incomplete records. You've been buying and selling over a long period of time. How do you judge your cost? So there's a lot of things that need to be considered, and I think they should at least sit down with the major stakeholders and think, okay, how do we fix this so that we can implement it seamlessly.
Right. And I'm just seeing a new report from Fortune's magazine saying that Kenya is ranked the 7th best investment destination in emerging markets. Just looking at that, and obviously looking at the World Bank Ease of Doing Business Index, where Kenya doesn't feature favorably, is there some contradiction in terms of how the government is trying to improve the investment climate in Kenya?
You see, when it comes to Kenya, there's the reason we have foreign participation, or why people, people from outside like Kenya, is because there are quite a few good companies in Kenya, well-run companies that have a huge presence and have a competitive advantage in the market, which is why people come here. So when they come here, they come and they buy the Safaricom's, the EABLs, and counters like that. So I understand why Kenya is an attractive investment environment, definitely for outsiders.
All right. And Crystal Ball, do you think the 6.9 is attainable?
I mean, it is if everything goes right, but how often does everything go right? For 6.9 to be attainable, we need to, the rains need to come on schedule. Tea prices need to go up. The infrastructure spend needs to trickle down. So it's attainable, but there's a lot of moving parts to it. So all those moving parts have to move together for you to get to the 6.9.
All right, thank you very much. Yeah. It has been Peter Ngiano, the General Manager for UAP Investments, just trying to cast a crystal ball in terms of where they think the economy shall be in 2015. Najma Ismail, what's happening with donkeys on YouTube?